Good morning, everybody. We are Mortgage Pros 411. I am Audrey Boissonou and my co-host Kevin Casey. We are joined today with Thuan Nguyen. He is the Loan Factory, and he has closed a bazillion. I don't even know what the number is anymore. $1 bazillion of loans, but has managed to transition from almost all refis to almost all purchases. So we're going to talk about that. But before we get to that, Kevin, we have an NMLS coming up, class coming up live.
Live in person.
When?
With really great instructors. Do you know who they are? Audrey Boissonou and Kevin Casey.
Oh, right.
Teaching a class live in person, Daly City, just shy of the San Francisco border, like maybe 100 feet shy. And it will be on August 24th. So if you're looking for a live in-person class, you don't want to do the online classes that make you keep your face on the screen the whole time and interact with the stuff and you can't move. Yeah, live in person is way better.
It is a very, very pretty view of the golf course too. And again, we do keep it moving. It's not boring. You don't fall asleep. You know, we occasionally zap you with a cattle prod, make sure you're participating. It's great. And and there's lunch provided. I don't know what the heck it is, but whatever. Okay, so we missed you last week. I don't know, Kevin probably didn't notice, but I was lost without our Tuesday update on the 4th of July. It was just the first time we've had a holiday stop us on a Tuesday. It was weird, wasn't it?
It was odd.
Yeah,
I was actually busy with loans, so I was kind of glad we didn't have to do the show because it was like even the 4th of July, I was actually working on loans. So.
Okay, whatever. I mean, don't ever make people feel like the show isn't the most important thing, but I am very happy that you have loans to do. That's really good. So I wanted to start today with, so every once in a while, our friend Rob Chrisman is on fire, and today is one of those days. So I am going to quote him a lot. Ready? First of all, it's very important to note he led off with that today is free Slurpee day at 7-Eleven. That's right. We don't typically mention places that we don't go to, but today, apparently, because it is July 11th, which is 7-Eleven, you can get a free Slurpee. So if you're feeling like you haven't closed enough loans this year and you've been budgeting your Slurpee allocations, today's the day. Go get one. With that being said, he published a little article that reads, interest rates are like weather or like signs of the zodiac. The only function of economic forecasting is to make astrology look respectable. That is a quote from John Kenneth Galbraith. And basically what he was talking about, which I thought was really interesting, is we've been so fixated on rates and when are rates coming down and when is it going to be better, et cetera, et cetera. And who was the holdout in all of this? Kevin, you'll know. Rob Chrisman has maintained for the longest time that we were not in a recession, things were better than it was being foretold, and to not look for the rates to come down. And here we are. So a lot of other people were forecasting that rates were going to get better this summer. What happened? They got worse. Okay. And I remember 2 years ago, next month, where somebody was forecasting that rates were going to be, and I quote, lower than they had ever been before, saying that they were going to be in the ones, which never happened either. So this article is worth looking at. Chrisman commentary, go and read it. It is so entertaining.
I've actually been using rates to my advantage now because I just say, hey, well, rates are going to be going up, so you better do it now.
Well, okay. So yes, Kevin may or may not have wanted to start prognosticating on what the rates were going to do a couple of years ago. Do you remember that, Kevin? Mm-hmm. And somebody put the kibosh on that. I don't know who that was. Some, loud, bossy chick from California, maybe. But anyway, so prediction is very difficult, especially about the future. So, and that is attributed to either physicist Niels Bohr or Yogi Berra. So bottom line is the industry has been thinking, oh, if we just wait, if we just hold on, rates will get better, the market will get better, our business will get better, and none of that happened. And so I think it's really important to note that rates don't drive our business. And with that, we have Thuan Nguyen with us, who went from being 95% refis to almost all purchases
That's
I
amazing.
mean, okay, so I have to read this because it is really, I have a really good friend. I will not say her name because I didn't get her permission, but this was the email. Okay. Okay, just saw his numbers. Very interested to hear your interview for sure. Hard to see how he turned a refi ship into a purchase Titanic in 1 year. Feels like he must have a big team, which is fine, but unless his software fridge kisses realtors, that is a staggering number to turn out literally overnight. So people are listening. Thuan, how on earth did you go from doing almost all refis to doing almost all purchases in this market? Tell us everything you know so that we can duplicate it and change everyone's lives forever starting now. Go.
Yeah, so first of all, I always focus on building my database, the client base, always maintain the relationship with them, always, stay in front of them so that they will be your client. So that is the biggest mistake that a lot of people in our industry, they make. Basically, they focus on earning more clients, but they don't focus on retaining the clients.
Mhm.
And retaining clients is super easy. Earning one new client is super difficult.
Yeah.
So most of us focus on the difficult task and ignore on the easy task. And that's why they fail. So I focus on my big, huge customer base and try to work on that. Try to stay in front of them, let them know that we're still in business. We are not contracting, but we are expanding. In this market, so many lenders, so many business contracting, letting
Right.
go people and even disappear. I'm doing the opposite. I let them know that I'm on the offensive. I'm growing. I'm doing better and better. Let them know what's going on with us. Especially, there's a few cool things happening out there. Especially, there's a few things that I promote and the customer love it. For example, one thing I promote is California, they have the Dream for All program, the share appreciation. So I promote that and people in California love it.
Well, wait, okay, so you promoted Dream for All. They ran out of money in 3 seconds.
Yeah.
And the program was finished, and that was your fault then. All your clients are the ones who took it. Is that correct?
So basically, we as a professional, we need to educate our clients and try to help them. So, the demand is huge, right? Everyone wants to take advantage of the program and they know it's difficult. They know that the money will be gone quick. So if you can market to them, say that, hey, contact me. I know how to get it done. I know how to, use it, how to capture it quickly. So if you let the consumer know that you are an expert, they will likely to reach out to you, because if they work with some other loan officer, they might lose the chance to win. So I even educate them like, okay, last time $300 million ran out in less than 2 weeks.
Right.
And now people are aware, and the money is less this time, only 200 million, and it will be gone in about a week. So what do we do to increase our chance of getting approved for the money? So, hidden on what in their mind, what are they afraid, and try to tell them that, okay, you work with me, you have a higher chance. Then people would come to you and ask you for help. Not only that, the realtor too. I use the program to try to get to build more relationship or increase the relationship with the realtor. The realtor, just like us, they need more clients, right? They want to help the clients, and they know that this program, if they take advantage of the program, then a lot of clients will come to the realtor, right? Realtor, just like us, we both helping the client to get into the house using this program. So realtor also take advantage of the program to promote and to get more clients. And a lot of realtor, they don't know as much as we are, because we do loan. This is loan. So I reach out to the realtor and share with them, hey, do you know that this program will be gone in a week? but you know that you can use it to promote yourself. You can do it for marketing. You can do it because realtor just like us, we need something to market ourselves on social media, right? So I help the I help the realtor. I even have a section later on today to talk to over 200 of my loan officers how to use it to target not only the clients but also realtors to grow your business. You know.
Okay. So I want to
So
I want to go back for a minute because I want to let everyone know that you started your career in 2007. Does anyone here remember 2007? Personally, I've walked it out. I had way too many PTSD symptoms when I thought about it, so I've just stopped thinking about it. So you got your license in 2007.
yes,
Let's just be clear, we're not born in this country, so you were not necessarily English as a first language, and you decided to get your real estate license and your mortgage, so you could do mortgages, and you went out on your own without working for anyone else. How did that work out for you? How'd that go?
it was really a bad choice, but I think I'm lucky that I make that decision because I was able to build my business my own way. If I learn from someone else, I will stick to that and will never grow this big.
Right. So you
So-
started off and it didn't go well. So what did you do? Did you quit?
Yes, kind of quit.
No, you did not quit. Come on. You closed your
Kinda,
business, but then what
kinda.
did you do next? You went to work for someone for a while, right?
Yeah, I went to work for a startup company, a high-tech company in Silicon Valley.
Okay.
In the computer world.
Mm.
But I still keep this business on part-time.
Right.
And, because business is gone. So I need the main income. So I think a lot of people right now facing the same situation. So there's nothing wrong to get another job, just to maintain your livelihood. But at the same time, keep the business going, focus on it, work hard. I work like really hard to try to grow my business. And that's the way it should be.
Right.
Don't give up completely. If you have to spend time getting another job, that's fine. But still focus on growing your business, growing your knowledge, and
I
don't
want
give
to
up.
talk about how you distributed that time, because I had a really interesting conversation with a tech guy yesterday who is very convinced that loan officers are well, first of all, he threw a statistic at me that blew my mind. He said only 5 to 25% of the tech tools that are provided to loan officers are being used. He said that companies are going to all this trouble to roll out this tech to their LOs and they don't participate. And I know that I've been guilty of this too, because frankly, they throw 8 different things at me all at the same time. My brain goes into, fuzzy overload and I don't do any of them, right? So I think there's a disconnect between how we connect loan officers with tech, but also it's starting to feel like tech is a little bit of an illusion and a waste of money, which I know you don't agree with at all. So we're going to get to that. But again, the tech guys think that LOs want to do as little as possible and make as much money as possible, and that they're not really an asset. So we got to find some happy medium in there, because we both know that people matter, LOs matter. And you are very much a proponent of tech, and so am I. I mean, I believe there is a very useful and important place. But how do we figure out where that is? So when you were working a full-time job and a part-time mortgage, which I'm not a big fan of, because I think you got to focus to, really go for it. How many hours a day were you working?
Oh, I work nonstop. I work
How many? Come on, tell us. Tell
at
us what
least
your day
14
looked
hours.
like.
At least 14 hours a day.
At least 14 hours.
And I have to commute to work. So 1 hour each way. And during that hour, I carpool and I work nonstop.
On the phone, right? The whole time.
Yeah, on the phone all stuff. And then even at lunchtime, instead of hanging out with my colleague, I get into the corner and working on the loan business. Okay. That's how it is. Yes.
So I think that LOs have to get back to realizing that you have to have a work ethic. Whatever your schedule is, you need to be working full time, and then plus, if you have to have another job, then you better be doing that job. And then, I mean, if you're working 14 hours a day, you're working 8 hours at your regular job, and then almost another 8. So 6 to 8 at your mortgage job. So it wasn't really part-time, was it? Okay.
Exactly.
So to make
Because
that work,
the client
you
can
gotta
see
grind.
the client can see how hard you work, how fast you work, how responsive you are.
Yep.
So if you are slow, they know that. If you don't work hard, they know that, and they can feel it too.
Yep.
If they can feel that you work hard for them, you're always available for them,
Yep.
they will like you, they will go with you. If
Yeah.
not, they will leave you.
Right. They're going to find
I-
somebody who is invested in them. So if you're not invested in your profession, then you're not going to have a career, right?
I've
Okay.
always told new people that the secret to being a great loan officer is that you only have to work half a day. And it doesn't matter what 12-hour period of that 24 hours you pick, it's still
Okay, I want to see Kevin's schedule for his 12 hours a day, but we can come back to that later. Okay, so you managed to get yourself to the point where you were making $28,000 a month in 2000, what, in the mid to, like 2008, 9, 10, somewhere in there.
Yes.
Okay, with how much help did you have at that point? How many people did you have working for you?
Zero help. I work by myself.
You worked by himself. Okay.
And back then I make 28,000 a month myself.
Okay.
No
So
overhead.
at some point you decided, okay, that's enough. I don't need my tech job, correct?
Correct. That's
Okay.
correct.
And then you told your wife, I think I want to open an office. I need some help. And she was like, dude, why? Right? Like,
Exactly.
yeah. Okay. So tell us how that went.
So I went ahead, opened the branch, hired a few staff, and my income tripled.
Okay. So your income tripled. So everything was going well. You were figuring out your systems at this point, right? Did you have a system for having your database in place and keeping in touch with people? Okay. And we're going to come back to that in a minute too. Okay. So at some point you think, California is a big state and I want a bigger piece of it. So this Silicon Valley thing is nice, but there's a bunch of people down south that I want to go meet. So then what happened?
Then I opened up an office down south.
Yeah. How'd that go?
Bad.
Why did it go bad?
Because the Southern California is the most competitive market in the country.
Wow.
Very competitive.
And what did they want from you? Tell me what
money. They want money under the table. Not
Yeah.
only realtor, but consumer.
Oh.
They expect that if I refer a client to you, you
Wow.
make money, then you need to pay me. So it is an expectation. It's a norm. It is the norm in Southern California.
Okay, so just to take a moment and remind everyone, that is illegal. Okay, so what he was saying no to was illegal and correct. So good job, Thuan, because it must have been tempting with all those little barracudas with their hands
You
out.
didn't know how bad it is. We lost 10,000 a month for 2.5 years.
Wow.
And then my employee, my staff told me, hey, Thuan, just allow me. We pay them 500, 1,000 per transaction, but we can make much more. And I'm sitting here, I have plenty of time. I need more loans.
Right.
So allow me to do that so that we can make money. They are happy, everyone happy. And even the consumer, they get good rate. But I said, no, that we cannot do this completely. We cannot do this. And that's why we lost for 2.5 years. But it turned out that later on, we are so successful because all of those clients, all of those realtors, they know that we do business ethically. We have low rate because of this. So they come back to us.
Okay.
They even ask us to help them, even when we say no to them. Yeah.
Great. Well, and just remember, everyone, that in 2007, 8, 9, 10, there was no social media. They were not going on Facebook, Instagram, TikTok, Tinder. Oh, not Tinder. Anyway, they weren't doing any of those sites because they didn't exist. So you were doing this all old-fashioned way, word of mouth, getting out there, busting your hump. You were going to what? Going to offices to meet realtors? How were you meeting realtors?
Back then, I did not have time to go to meet realtor. So I didn't have a traditional way to reach out to the clients or realtor. So I went with a unique way. So I went on radio, local radio,
Okay.
to do talk show and advertise there. And that's why Initially, it's not working well, but over time, people listen over and over.
Yeah.
They recognize me, they know me, I'm honest, I have good rate. So they kind of get the message and then they start supporting me.
Okay, so good.
Just
Okay,
a
but
community
now,
radio station with like a smaller station, like just.
Yeah, it's a small station. It's cheap, really cheap. It's cheaper than you thought. So,
okay.
Interesting.
yeah.
Okay, so you were creative at a time where not everyone was being creatives. So, and obviously you're able to learn from your mistakes, right? So it's not, so what people need to realize right now is you don't have to get it perfect. You don't have to do everything right the first time. You just have to try new things, do something different, go out on a limb. And if it fails, it fails, but you learn something. So it's not really, it's, you have to try things and you
Don't
have
give
to
up.
fail
Don't
before
give
you
up.
figure out what works, right?
Exactly. Don't give up. First, see, I opened an office in Southern California. I lose money for 2.5 years. I didn't shut it down. I keep trying. I keep trying and improving. And then I advertise on radio. It didn't work initially, but I tried to improve. Try this, try that, and it works. So you have to keep trying. Don't give up.
Right.
Don't be
No.
afraid.
Well,
Yeah.
and that's right now, I think that's so important because a lot of people are afraid. NAR is saying what 250,000 realtors are leaving the business. But you know what? Considering only 20%, I mean, 80% of the business is done by 20% of the
the
realtors,
market. Yeah.
who cares, right? And the same thing's happening in our business. But again, who cares? It's less competition that shouldn't be there. So if you're committed to the business, then get your tail to work. Get working, because I think I know a lot of LOs took a much needed vacation. A lot of LOs needed a little break and they were burnt out and blah, blah, blah. Get over it. We are well past all of that. Get back to work. It's time. And these systems are terribly important. And I think
Yeah,
that,
I want to hear more about its systems because,
yeah,
I've often told people this is like, if you're a McDonald's owner, right? You relying on your systems to serve how many hamburgers that they serve in a day. And if you're only serving half that, you are driven to fill that need and get out there and promote because you realize, wait, I have a whole restaurant. We can serve, 10,000 hamburgers a day. And also we're only serving 5,000. You're like, wait, well, we can serve 10,000. You're going to drive in the $10,000. You're kind of, you feel the need to drive that need. But when you only have a system that feeds 5,000 hamburgers and you're doing 10,000, or if you only maybe go the other way around, if you have a system that only serves 10 loans a month and you are doing 20, then you burn out. But like Thuan here, you can do, how many loans a month can you guys do?
At the peak, we closed 2021. We closed on average 1,000 loans a month.
how many people?
How
How many people
we have
were working on those loans?
over 100 people for sure, 200 people. Yeah.
Okay, so each person is closing about 10 per, which even a good loan officer feels good at 10 per month.
Yes.
Okay,
Yes.
so you were closing 10 loans. I want you to explain what you do with your database. How do you keep in touch with your database on a day-to-day basis? Like, are they on a rotation? Do you call them? Do you meet them for coffee? Do you send emails? What do you do?
It's so big that I don't have time to reach out to them one by one. I'm different than other. If you're small, if your database is only 50 or 100 clients, then you should personally pick up the phone, talk to them, or chat with them on social media and meet them over lunch or a drink. That's what I recommended. But for me, my database is so big, so I have to be clever. I have to mass target them. I have to email them or target them on social media, or even I create a newsletter to send to them. And
It's in the newsletter. How often?
I'm trying to do every 2 weeks now, but it's very important. Newsletter, I try to do more and more. It's a clever way to send to them, because if you send to them and they don't see the benefit, they will mark you as spammer. They don't want to receive an email from you. But if you send the wrong message, they also don't want to. So the newsletter is a clever way because it's the official. from the company to them. And it has more than one content. It has different section, different area. So if they read one section, they don't see it relevant, but there's other section relevant to them. So they will keep wanting to receive the newsletter. And that's what we want. We want them to continue to receive communication from us. And as long as we can stay in front of them, that is our goal. Because, you know, with mortgage, we don't know when they will need, but as long as they know us, as soon as they need something, they need mortgage, they will reach out to us. So that is the key in our industry. Always stay in front of the clients.
So a newsletter. So I did a newsletter that I got from Joe Stump way back in the day, like the early 2000s.
I had that same one.
And then my partner and I would put in little bits here and there. Like back then you mailed it, right? In the mail, and people loved it. We put in little like bits of non-mortgage stuff and mixed it up. They thought it was great. It was entertaining. It was funny. They loved it. So we didn't just cut and paste some, because if somebody isn't interested in a mortgage, they're not going to care anything about what's going on with mortgages. Although a lot of people these days are like, they want to know what's going on with the market, right? So you can mix that up, I think, but add your own flavor to it. That's a great idea. So do you create your own newsletter from scratch, or do you get it from somewhere and then you modify it?
Basically, every day I receive at least 2 or 3 different newsletters.
Oh,
So I learn from them.
okay.
I try to get better than those newsletters. And I try to come up with the content that more relevant, more update, more, you know, that I want to send a message that that I know that they want to read or they will like it. So it always have to refresh the newsletter, or to always have to be good.
Okay.
So do you have people that are working on this newsletter for you and your
No.
staff? No, it's
No,
you.
I do it myself. But
Wow.
luckily we have ChatGPT. They can help us improve. My writing is terrible, but ChatGPT helped me. So it's getting so much better.
Okay, so
Nice.
just to interject a slight little reminder, just to hearken everyone back to the story about the attorney who thought he could have the ChatGPT writing his brief. Make sure you're double checking whatever ChatGPT comes up with. Don't just cut and paste, or I will put you in timeout and you'll be in big trouble. So one of the things that I noticed when I've listened to you and I've talked to you, Thuan, is that you learn from your mistakes. You're a problem solver. That's your role. You solve problems for people, and so you're good at knowing figuring out what the problem is and then finding a solution for someone, right? And
Correct.
that is what will differentiate us from the tech solutions that people are trying to promote as a replacement for the loan officer. Because again, Kevin and I were at a tech conference a couple of weeks ago, and it was fascinating, wasn't it, Kevin?
Yeah.
Listening to them talk, and they really, I mean, a lot of them really think that they can get rid of the LO. And the fact that I am working to get my hands on a breakdown of what the cost per loan that is so astronomical consists of. But we heard someone threw out a number that at least 50% of it is tech. And if companies are spending 50% of their budget on tech and only 5 to 25% of it's being used, we've got a big problem out there. And it's not the LO, but okay, let me be clear. It is partly the LO, because the LO is not engaging to use the tools that are available. They're just thinking, oh, if the rates come back, my life will change for the better again. Everything will be fine. I would just like to remind everyone that while we were so busy back then, Kevin, do you remember this? They kept going, I'm so tired, I'm burnt out. And I kept saying, you know what? We go in cycles, and at some point you're going to be sucking in, and you're going to be so sorry you said that. And here we are. So with that being said, let's continue with, okay, so you have this newsletter thing that's really working for you, and you're focused on that, and you're consistent every 2 weeks, right? You've got to be consistent. Okay, what's the next? Oh, and how many people are in your database?
88,000.
Holy guaca schmuckalaka. That is a lot of bodies. What is your constant contact bill? My God. Anyway, don't tell me. I'm just kidding, sort of. So anyway, 88,000 people, and we won't ask for your click rate or your open rate, but I'm sure it's high if they're
very high.
okay.
Good.
All right. All right. So what's the next part of your system that is really keeping people in front of you and getting that return business?
There's many things, social media, but we also build in a chat GPT style.
Okay.
Yeah. So we release in this week internally, and then we also build in a web, a mobile app, which we are working on that. Hopefully, it will help improve the customer service, improving everything. Mobile app is the future. So
Yeah.
when we talk about tech, we talk about, of course, we know technology moving so fast, but mobile, people are moving to mobile. We know that.
Yes.
But right now, our technology, none of our technology focus on mobile yet. So mobile is the future, and we are working on that.
Okay. So you are going to shift to mobile, and then how do you get your loan off? So just to be clear, you are licensed in 46 states right now.
47 now.
I want to briefly talk about that in a minute, just because I think that could be an opportunity for people here to some extent. But let's focus on, you have, you said 200 loan officers right now that you're working with?
260 now.
260?
Yes.
God, I blinked and all of a sudden there's more. Okay, so I know that you have big goals as far as what you want to accomplish in the mortgage space and where you want to be. How do you get your loan officers to show up and use the technology that you're providing? How do you get them to do that? You make them? You force them?
Yeah.
What do you do?
We build our own software, our own technology,
Right.
and I would say it's the best out there because
Okay.
our platform is all in one. It has the POS, LOS, it has the CIM, it has the pricing engine,
Okay.
all in one. That's why it's so good, so powerful. And we give it to the loan officer for free. They have to use it. They have to use it every day. And we show them the benefit and they get use it.
Okay. Okay, so I know that these tech companies, they're telling me that they're going to do demonstrations. The LOs are like, yeah, we want this. They're really pushing their companies to get it. And then they have a meeting and like 3 people show up out of, like not even 10%, or, you know what I mean? How do you get your people to show up? I want to know.
Basically, we make it so easy, so simple. We don't even give them a choice. They don't have to use any other software. And the only software is the one that we built.
Okay, so I have been talking about this, just for the record, for a long time, about how there's too many different ones. Why aren't they all together? And also I've gotten into arguments, go figure, with tech people, because they're like, well, I'm like, why does it have to be so complicated? And I'm told, oh, it's complicated because tech is complicated. I'm like, yeah, but you have to make it simple, like an iPhone. I can pick up my phone and start flipping through it and figure out how to use it.
I can figure it out. Don't even need instructions.
Yes.
Yeah, exactly. And so so you're making it so it's super simple and it's easy to engage in.
That is the key.
Hallelujah. Okay, that's great.
If you check out our website, we have a pricing engine. Anyone can use it. It's super easy. It takes 30 seconds to get the result. If you go to any pricing engine out there, it's freaking so complicated.
Yeah.
And I don't understand why they make it so complicated.
It's because they're trying to capture the borrower's information. That's why.
But then usability is important. So if you check out loanfactory.com, you can see it's super easy. Anyone can use it. Anyone can see the result there.
Okay, so we're not going to get, I'm just going to tell people before I talk about this next part, do not ask questions about how the logistics of this pricing works based on LO comp, because you can direct those directly to Thuan later. We're not going to do that here, because I've seen this happen with you where they're like, but what about this? Or what about, no, we're not doing it. So if you have questions about this, you can talk to Thuan later. I would like to talk to you to speak to the fact that you're licensed in 46 states. And if somebody wanted to get licensed in a state, that somehow there is a way for them to connect with you and you're like the base operation in that state, and then they can connect their license in that state to you. So talk about that just for a minute.
Yeah, I'm so amazed that I would say 80% of the loan officers didn't even aware, didn't even know that they can get licensed in more than one state.
Right.
And they can work with multiple companies at the same time. Most people don't know about that. So they got stuck with one company in one state, and that is a waste of their time. It's a waste of their opportunity to grow their business. Because if you look at a normal business, most people nowadays don't even see the client. We never see the client.
Mhm.
We work with clients everywhere, not only
Right.
in our city, but it can be in another state.
Mhm.
Social media allow all of this to happen, right? So I when I go out there, I talk to loan officer. I tell them very simple question. Why don't you get licensed in Texas, Florida? Those are the two best states that growing, business are growing. You can get a lot more business there. Do it. And then they tell me, oh, but my broker doesn't have a license there. I say, come on, you don't have to work for the same broker. You can work for a different broker in different states. So that is what I encourage all of the loan officers to do. And with Loan Factory, we are in 47 states. You can stay with your own company, even if you own your own business in your own state. You can work with Loan Factory in other states.
Really?
Why not? Yeah, most
Okay,
people don't
so-
know about this.
So let me guess. One of the states you're not licensed in, that would be probably New York.
Of
Right.
course, no one's licensed.
Yeah.
People in New York don't want to be licensed in New York. Okay, so again, you blink and you add something new. So last time I heard you speak, it was 46 days. Now we're up to 47. So I'm just going to assume we'll be at 49 in no time at all. And that we'll never get to 50 because most places don't. Sorry, New York.
Yes.
So I wanted to talk a little bit about, I had a chat with a friend of mine who's an AE, and I just want to share this with everyone, because with this idea that there's no business out there is a bunch of baloney. Okay. From Friday at noon to Monday at noon, she had received 110 pre-quals, right? So off the bat, she said 41, she said no to 41 of them. For down payment, for FICO, in her words, because they sucked. So anyway, so there were 41 that were like a no-go right away. 38 of them had gone into contract since July 1st with no financing in place. None. Who in the HE double toothpicks goes into contract without knowing you can get a loan? But here's the problem. So this is non-QM, just to be clear. And there have been some monster changes to non-QM in the last couple of months. And so these people were like, well, my borrower has good credit and blah, 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 and so I can do it, no problem. Well, guess what? Not so fast. So 35 went into contract. Okay, so I want to tell you the states too. I thought this was important. Hawaii, Florida, California, Texas, Colorado, Arizona, Nevada, and Tennessee. All right, so there are your states. It included Texas and what was the other one you liked, Thuan? Florida, Texas. All right, so 10 had said they could, they had good credit, blah, blah, blah. Everything is great. But the problem is there is this thing called the DeSantis law that went into effect in May, which I was unaware of. And I'm going to do some checking on this and get back to you with some more information later. Bottom line is there was this law that went into effect so that you cannot lend in Florida to a whole bunch of different ethnicities like Chinese, Russian, who else? Anyway, and so a lot of lender LOs are not aware of this. So if you have a perfect borrower in Florida, but they come from the wrong country, DeSantis is not letting you do that loan at all. Is
that even legal?
I don't even know. Stand by. I'm working on this. Okay. Bottom line though, is there is this lender who has pushed back and has a way that they've gotten around. They can do those loans. So I just wanted to say that I-10, they're doing a lot of I-10 loans. And the suggestion was you submit them as TBDs. There's a lot of hair on an I-10 loan that you need to work out before you get to the point where you're in contract. So you want to make sure you get those approved and address the conditions up front. And but I-10. So are you doing I-10s, Thuan?
Not really. I don't focus on that.
Oh, wow. Really? I love that. Okay, Mr. I'm from not here. So that is not your primary. So what are the loans you're doing the most of?
Right now, I'm promoting another strategy that I'm promoting is
Uh-huh.
the One Plus from Rocket Mortgage. So the
Okay.
borrower only need 1% down.
Okay.
Okay,
The
yeah,
lender will give 2% rent plus no PMI,
Yep.
and the rate is still good. So this is the best program out there, and I'm promoting it crazy. I got so many clients, and a lot of realtors want to work with me because of this. So the One Plus program, 1% down, 2% rent, is the rate program.
And where they work, where are those working? Like if you're in a highly competitive situation, which we're at a point
Yeah.
again where, like a third of the contracts are going over asking, multiple offers, all that. What, I mean, is that a very specific location that you can do those, or what are you seeing with that?
I've seen a lot of that in California, in
Where
the
in California?
California, Northern and Southern California, Northern,
both
and
really.
then also Seattle area, Washington. A very, very hot market right now. Multiple
Yeah.
offer all the times. Yes.
But people are still able to get approved with 1% down?
Oh, no, the 1% down, there's a limit. The loan amount have to be 350.
Oh, holy.
And the borrower cannot down more than 3%. They have to down 1 to 3%. So it's mostly in the lower home price range.
Okay.
Texas, Florida, those
I
are
was gonna say, not in California.
not California. Yeah.
Okay, gotcha.
But
All
very
right.
popular. People love the program. 2% rent,
Yeah,
1% down, low rate. I mean, no PMI.
Yeah.
It's the best program.
Do you know how many of the dream
Fall.
loans you closed? How many did you close?
To be honest, not a lot, only a few.
What happened with that?
Uh,
Why didn't you close more? You just couldn't
money
get it.
money ran out so quickly.
ran
So
out.
we
yeah,
learned
that was
from
kind
it.
of crazy that I couldn't quite figure how the money ran out that quickly, because people don't go into contract and close that quickly. So how did they run out of money that fast? I've always wondered that.
because the amount of money is 20%.
Yeah,
And home price here is $1 million easily. So every recipient, every borrower get $200,000.
there we go.
Yeah,
You-
yeah, yeah.
That's a lot. Yeah.
Like
Well,
2,000 people, that's the money ran out.
Boom.
2,000
Yeah.
people is nothing compared to big state like California.
Right.
Yeah.
We have a lot of comments on the 1% Rocket program. It's restricted by AMI. Max loan amount is 350. And so you just have to watch the parameters, but figure out where it fits, which you guys have obviously focused on. Yeah.
Yeah.
We even built a pricing engine for that on our
You
pricing engine. Yeah, the borrower can go there and figure out quickly, really fast.
You know, I got to comment on this about the thing about going outside of your territory, because most loan officers, they just work where they live. They work for clients that know. It's really critical to have a license out of where you live and work, because like for me, I'm in San Francisco. If tomorrow there was a big earthquake, I'm out of business for months, because no one's going to be doing a loan until all those homes are re-inspected and confirmed for an earthquake damage. And so unless I have another market that I'm targeting, I am foolish not to be targeting other markets.
Wow. Wow. See, I always say, wait for it. He'll get it. There it is. I had never thought of that. I hadn't thought of that. But again, you have to have a way to connect and market in those areas.
I want to chip it in one more thing.
Yeah, please.
If you're in California, for example, you know that it's extremely difficult to grow your business. The competition is crazy. Not a lot of realtor, not a lot of transaction. But if you open your mind, if you try to get licensed and pick one state that you have connected to, you will be surprised that it is so much easier to grow the business there.
Yeah.
Not a lot of competition. The realtors are so friendly. The people are so friendly. So you never know, you'll be more successful because your competitiveness is so good already. You're in California, you have to be good to stay in business.
Yeah.
Then if you go to another state, it is so much easier to grow your business and to win business. So don't restrict yourself to one state. Go out there, try to do something.
Okay,
so it's something I've noticed here, just being not just from California, but being from a city like San Francisco, that the we expect everything fast, 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 fast. That's just how it is, always fast, fast, fast. And then I get to a loan, it's just outside of the city. It's like in the country, like, and like title will take days to get back to you. You're like, I
Exactly.
expect it in 10 minutes, not days later. And everything is just slows down to a different pace. And you're like, and they think you're magical because you just get it done quick. So
They
yeah.
find you annoying. So I closed a
Yeah, I
deal.
know, that's true.
I closed a deal in Tennessee a number of years ago, and these women were so nice to me on the phone, and I thought everything was fine. And then I found out later they were talking crap about me behind my back because I was, from California and blah, blah, blah. And I'm like, but
Bless
it
your
was
little
so
heart.
slow. What?
Bless your little heart.
Exactly. It was like, that's where I learned how that really works. So, okay. So we have a couple comments. Dirk, who always cracks me up, he goes, that's called geographic diversification. Say that 3 times fast. So if you're, and between Kevin and Thuan, I mean, they're convincing me like, maybe we do need to get licensed. We've talked about it. Mark had made a comment that he got his license prior to 2012. And he's going to have to retake the whole test all over again to get the update. I took that extra. Just remember, if you did your license in 2010 or whatever, and then you did the extra, what was it?
USP test.
Yeah, that. Okay, so I took that, and by the way, I studied for at least 5 minutes in the parking lot before I went in to take it, scored a perfect score, and found out I could got in and taken it, got a 0, and still passed because they merged your scores together from the first test and the second test. Anyway, I was so freaked out.
By the way, it is extremely easy to get licensed in most states. Basically, you don't need to take the test.
The NMLS?
You don't need to take the test again. You only need to study 1 hour for every state.
Well, it depends on the state, isn't it?
Most state, 1 hour.
Most states are pretty easy. Yeah.
So you don't have to retake the whole NMLS test?
No test at all. It's super easy. That's why I say
third time. So that's the one problem I've had is like when I went to get another license, it's like it's took them over 120 days to get me licensed once I
whatever, it's fine. You had nothing but
whatever, it's fine. Yeah, so don't think, oh wait, I got a referral from Tennessee. I'll just get my license for Tennessee and start doing it. No, it takes 4 months.
So just to remind everyone, if you have any questions about licensing requirements, who do you reach out to? Mortgage educators. They are the go-to licensed folks. They're great, and they'll answer all your questions about what you need to do. And then, Thuan here can be your hookup in these various states, all but 3 at the moment. We have a comment here from Kathy who said that Guild has a similar or better program to Rocket. $5,000 lender credit for down payment instead of paid MI. Guild offers 1% buy down plus payment protection and refinance later if you're qualified, blah, blah, blah. There's some median area requirements, but it's a good program. So
I think Rocket is better, 7,000.
All right. Well, you guys compare. You guys figure.
And then a lot of mortgage company out there have false advertisement. They say that refinance for free. Of course, anyone can do refinance for free. No point, no cost. But what is the rate?
Right.
Don't fall for that trap. Yeah.
Right. Well, we all know to do our homework because there's all sorts of liars out there. Okay, so we have a question here. How do you network elsewhere? Do you spend time there? So someone's saying, like, do you go to these states? And what if you have to have brick or mortar? Do you have like offices there? Is that what you do?
No. Most nowadays we try to control our overhead. So we rather spend the money on advertisement, marketing. Okay. So try to reduce your costs. Okay. But make sure you are effective. So I would travel there, get to know a few local realtor and the people there. That's the best way. Okay. A lot of local realtors are very easygoing. They are very friendly. So it's easy to connect to them too and work with them. So I would do that. Yeah.
And make sure you're aware, like I think Nevada has a brick and mortar requirements, so make sure you know the requirements. But again, if you've got somebody who's already licensed there, then and they've already done the homework, that's great. So it is, all right. So I just want to throw out a few things just to give you a little hope for the future too. So, as we're watching the media reports, which we know are a bunch of bupkis most of the time, I want to make sure that we all are remembering that delinquencies and foreclosures are still extremely low. So properties 90 days but not in foreclosure are down 18,000 for the month, and they're down 203,000 from the beginning of the year, which is great. Great. So, and then make delinquencies were second lowest on record, which so again, so if people are still, this whole affordability thing, the sky is falling, everything's crap, it's not true. So there's so much demand out there, and that is big part of our problem, as we all know. So anyway, I also thought it was very interesting too. 43% of the delinquencies were for FHA. So the GSEs.
Wait, 40% of delinquencies are FHA?
43% of the delinquencies are with FHA. But again, that doesn't mean there's a lot of them. It's just
Yeah, because there's not a lot of FHA loans.
there. Well, and also it is, so you've got 43% of the delinquencies which are at all-time lows. So there aren't tons, but a lot of them are FHA. So make sure you take the time and care, follow up with your FHA borrowers, and also make sure that they realize that there is help out there for them. So for God's sake, don't crawl under the, meltdown rock where you didn't talk to your servicer, you let yourself go into foreclosure. Most people have equity, and on that, the equity has taken a big, it is marching forward. We have got appreciation like crazy, people. So we are back up. We were up 0.7 in May appreciation. That's according to Black Knight. And we're on pace to somewhere between 7 and 10% appreciation for 2023 if
Nice.
we maintain this clip.
Even with these rates.
Pardon me?
Even with these rates.
Yeah, so we have got to convince people, and I have the same problem where I've got borrowers who are like, do, and I'm like, hello, it's not getting better, it's getting worse. Get your tail out there, and yes, the rates suck, whatever, get over it. Can you afford it? That's what we need to focus on, right?
Focus on the payments when you're talking to clients, kind of. You got to mention the rate, but focus on those numbers. It's all about the numbers. If the numbers work, then buy the house. It's that simple.
There are 5 different companies that look at home price appreciation: Case-Shiller, FHFA, CoreLogic, Zillow, and Black Knight. They are all forecasting 5 to 10% appreciation in 2023. And if you remember, a year ago, the sky was falling. Do you remember that? The sky was falling, and a lot of people haven't caught up. So let's talk about your social media for a minute, Thuan, because this is what people should be talking about on social media. Do you have somebody who does it for you? Are your LOs doing it separately? Are you doing it as what are you doing? How do people engage? What's the best way?
So I have a team.
You have a team. Okay.
To help me with social media because it takes a lot of time.
You can handle the newsletter, but you got to have a team for social media. Okay.
Exactly.
Good to know where you draw the line.
The newsletter, I just need to design and hit the button. It's done. But social media is a lot more complicated. There's so many of them out there. And within, let's say we have Facebook, Instagram, TikTok, YouTube, blah, 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 right? And then within Facebook, we have different ways too. My own personal profile, the company fan page, a different group, and then different group have different type of group: real estate group, mortgage group, and then I need to have interaction with the member there, and what do we need to post. There's so many groups too. There's so many things going on within social media. So we need to have a team to work on that. And eventually I will roll it out for the loan officer. Right now, I just focus on my own production on the company. But in the future, we will help all of the loan officer at Loan Factory.
Okay. So you hired people to handle your social media, or so you've got experts doing it. All right.
Yes.
And it keeps changing. So you have to have somebody. You can't like lock into a system and then think you're set and you don't ever have to think about it again. You have to evolve with what's happening now, right?
Yeah, a lot of things happening. Constantly.
So your experts who you've hired have helped you stay on top of that. Yeah.
Exactly.
Okay. So how often are you posting?
I want every day or every other day, and that's what I try to do.
Into which platforms?
Facebook right now, but I recommend at least once a day. That's what I recommend.
But only Facebook, not on LinkedIn, not on TikTok, not on Instagram.
I focus most on Facebook, but I noticed that LinkedIn and Instagram are so important as well.
Okay.
So I'm trying to improve myself. I have weakness too. I'm not perfect.
What?
What?
Yeah.
No, no,
Well,
no, no.
A
I
lot
think,
of weakness.
I think that's one of your greatest strengths is that you're able to identify your weakness and then work on it.
Exactly.
I think that that is the best quality, because if we don't have to be perfect, none of us are perfect. We all make mistakes, but can you figure out what you suck at or what you could, okay, listen, I have a second mother who died a few months ago, who since I was a kid hated that word, and she has just cringed from wherever she is right now. Oh my God. Sorry. I just had a flash. I'm like, I can't say that word on anyway. Okay. So anyway, I think again, like if we can look at what have we not done before that we need to do, we can improve. And again, the tech guy I was talking to is just so pessimistic about LOs and their ability to change and redirect their energy and do things better. And I
Tell him that the tech that he built is not good enough.
oh God,
Yeah.
I will. Oh, I will. Sometimes maybe he watches this, and so maybe he'll hear you say that himself. But again, I believe, because it's the Pollyanna Greenpeace in me that my friends call me, I believe that we can change. I've changed. I used to hate tech. I used to think it was, I didn't like it. I didn't understand it. I didn't want to take the time. And I understand that is wrong. So if I can change, anyone can change. Anyone can.
Change is important. And most people don't want to change. That
Yep.
is their problem.
Yep. Yeah. And it's like, and it's, what do they say about eating an elephant? You can't eat the whole elephant at once. You got to start one bite
At a time.
And that's the trick. And that's what I keep thinking is the way forward, is we have to figure out how to break this down into tiny bite-sized pieces. So LOs who are self-employed and not getting paid a salary. So when they're spending time on learning new things and new tech and et cetera, it's not like the guys creating the tech who get a paycheck every 2 weeks. We are supposed to be going out and originating loans, yet we have to stop, figure out how to put a loan together, learn this new technology, do all these different things and continue to evolve, but it's all part of what we have to do, right? So we have to be open to that and keep that moving. Yeah.
Yes.
Absolutely.
So it's a lot. So we are down to the last few minutes. What is there left that you would like to share with us today that is advantageous? And if you could share your contact information too, then, or you can email it to me, we can embed it in our YouTube channel when we post the recording there. So we can do it that way too.
Yeah, I mean,
Both. Let's do both.
You're touching all of the main point. We need to look out there, try to do social media, try to be active, reach out to another state, try to get licensed in another state. Don't be afraid, go out there and then promote, stay in front of people, show them that you are a professional, show them that you have good program like One Plus program or Dream for All. Let people know that you are an expert, and then always build good relationship with your existing clients, the existing network. Focus on that more than focus on new clients. Yeah, all those things that we talk about. Yeah.
I don't think you can overstate how important it is to stay in touch with people. And again, it's not something I was great at doing. I mean, I'm very good at connecting, but I'm not great at promoting myself, and I'm not good at I didn't do that before, but I have a system that does that now, and I think it does a fair job.
I think most people want to do a lot, but they don't know how. They don't have a system. They need guidance.
Yeah, break it into tiny pieces. I think that's the way forward. So because why not start and stop with the same theme? I'm going to take a little moment and, oh good Lord, did I drop it? Oh,
I have to leave now.
Oh, Thuan's done. Okay, so we are done for today then. And we have a heck of a lineup for the rest of July. And I cannot, I don't have it in front of me who we have next week, but you will be very happy and we will send our usual notification. So you're going to leave. I'm going to end with aging is not for the meek. My wife makes us put $5 in the fine jar every time either one of us lose something that we later find in the house, like glasses, a remote control, a sock. After 13 months of saving today, we are buying a Ford Explorer. So
Yeah.
that's Rob Chrisman. I thought it was funny. It made me laugh out loud. Thuan, we want to thank you so much for your sharing everything with us today. And we will look forward to you seeing the rest of you next week, Tuesday, 11 a.m. Pacific time, 2 p.m. Eastern time. Okay, have a great week, everyone. Bye-bye.
Thank you.
Thank you so
for
much.
having me. Thank you.